Would you like to pay your mortgage off in 6 years instead of 30 years and save almost $240,000 in interest? This is a real client example. They had 28 years left on their loan. I'm taking it down to 6 years, saving almost $240,000 in interest using one strategy that the banks don't want you to know. My name's Sean Uehara. I've been a mortgage lender almost 20 years, and the first lien HELOC is the best strategy that you should understand so you can get yourself out of debt and start building wealth faster. And if you want to learn how to do this strategy, make sure to save this video because you're probably going to have to watch it again, or you can send a DM below, comment the word HELOC, and I will send you my free Mortgage Killer Blueprint guide to show you how to do this. This isn't some hokey strategy that's out there. This is something that's legit. The first lien HELOC works completely different than your traditional 30-year fixed mortgage. Instead of paying a ton of interest up front on your mortgage, and if you don't know what this looks like, I would encourage you to go look at your amortization schedule and your closing documents. With the first lien HELOC, we use our income to pay down our mortgage, and we're attacking interest on a daily basis. This means a faster payoff, less interest, and freedom for you a lot faster. You're basically flip-flopping the entire payback of your mortgage back to the bank. Here's my client's scenario. They owe $350,000 on their home. It's worth about $468,000. They have a 5.5% interest rate. They've been in their home for almost 2 years. Their take-home pay is about $12,000 a month. They've got about 16 grand in their checking account that we're going to reallocate into this HELOC. The reason why we move the money into the HELOC is because in a checking account, we're not making any interest. So let's move the money to the HELOC. It's going to pay our loan down. We're going to pay less interest. And with this first lien HELOC, you have access to your money for 30 years. And at the end of the day, after all bills and expenses are covered, we've got about $3,400 left over. And let's see the magic. So again, they've got 28 years left on their loan. They would pay back nearly $690,000 in principal and interest. We're going to take that same $350,000 balance, pay the loan off in 6.7 years or 80 months, saving them $238,000 in interest. The average interest rate to model this out is 8.3%. But remember, because we attack interest on a daily basis, we're only paying back $101,000 in interest. That will give you an effective APR of 1.7%. You're not going to find cheaper money than that. And if you don't realize how much interest the bank is throwing on you up front, here you go. 80 months, our mortgage gets paid off under the HELOC. My client has a $350,000 line of credit they can use to go buy more real estate, invest into a business, build some wealth today. If they stayed in their current mortgage, they would have only paid down $41,000. They would still owe $308,000 on their house. If you've got some cash flow at the end of the month, I'm telling you, you have to look at this loan. It's going to blow your mind how much money you are throwing away to the bank. You want to hop on a Zoom call? We can dive through your numbers, and I do this for